Today is not just another date on the calendar for the Pi community. March 3, 2026 represents a defining moment in the evolution of Pi network. This is the day the mandatory mainnet protocol upgrade to version 19.9 officially went live. And while on the surface it may sound like a simple technical update, in reality, it marks a turning point. It's the kind of shift that separates experimental projects from serious digital infrastructure. For years, millions of people around the world have been mining Pi on their phones, holding onto a vision of a decentralized currency that could one day power real-world transactions. Many have waited patiently, watching development updates, participating in KYC, running nodes, and contributing to the ecosystem. Version 19.9 is more than just code being updated. It is visible, measurable progress. It is proof that the project is maturing. The Pi core team coordinated a global effort to make this upgrade mandatory for all mainnet nodes. Every node operator was required to update their software by March 1. Any node that failed to upgrade was disconnected from the network. That may sound strict, but in blockchain systems, unity is critical. Imagine a city where half the traffic system runs on one set of rules while the other half runs on something different. Confusion would be inevitable. By ensuring every node runs the same protocol version, the network remains synchronized, secure, and stable. This upgrade significantly strengthens the network's foundation. Think of it like reinforcing the base of a skyscraper before adding more floors. Stability and security come first. Without them, growth is risky. With version 19.9, Pi now operates on the latest Stellar Consensus Protocol implementation, improving efficiency and preparing the network for faster transaction processing and expanded capabilities in the future. It's similar to upgrading an engine before pushing a car to higher speeds. The infrastructure must be ready for what comes next. What makes this development even more impressive is the strategy behind it. Instead of rushing into massive, all-at-once changes, the team is following a carefully planned 4-stage upgrade path set to conclude by April 2026. This incremental approach reduces risk, minimizes disruption, and demonstrates professionalism. In an industry where many crypto projects collapse due to rushed launches and unstable foundations, this steady method stands out. And the momentum doesn't stop here. Version 20 is already scheduled for March 12, 2026. That means the network isn't slowing down, it's accelerating. Each update builds upon the previous one, refining performance, tightening security, and moving closer to the long-anticipated open mainnet. Progress isn't theoretical. It's happening version by version, release by release. Behind all of this are the node operators, often overlooked but absolutely essential. A node is simply a computer running the Pi software, helping validate transactions and maintain consensus across the blockchain. These operators ensure transparency and integrity. The mandatory upgrade highlighted their importance. Their participation keeps the network decentralized and resilient. Running a node goes beyond mining. Its direct involvement in building the digital economy of tomorrow. As more people step forward to operate nodes, the network becomes stronger, more distributed, and less dependent on any single entity. The market has taken notice of these developments. Following the upgrade announcement, Pi coin experienced a noticeable price increase, climbing approximately 5% and stabilizing above the 16 cents level. Daily trading volume surpassed $12 million, and the market capitalization moved beyond $1.5 billion. These figures indicate genuine engagement and rising confidence. This isn't simply speculative hype. It reflects a response to tangible technical progress and structured development milestones. Analysts observing the charts have pointed to bullish formations, with potential targets extending beyond 18 cents and possibly toward 20 cents if momentum continues. But what's more important than short-term price movement is the underlying reason for it. Investors are reacting to real infrastructure improvements. Strong fundamentals tend to produce sustainable growth, and the network upgrades provide exactly that. Another fascinating signal comes from large holders, often referred to as whales. In cryptocurrency markets, whale behavior can reveal long-term conviction. The number of major Pi holders has grown to around 20, with the largest wallet holding approximately 383 million coins. In February alone, that same holder reportedly accumulated an additional 17 million Pi. Large-scale accumulation ahead of major upgrade suggests confidence in the roadmap. When whales accumulate instead of selling, circulating supply decreases, which can create stronger price floors. More importantly, it signals alignment between long-term holders and the development direction of the project. In many crypto ecosystems, whales exit early, taking profits and leaving smaller investors exposed. In this case, the opposite appears to be happening. Major holders are reinforcing their positions, reflecting belief in the network's future. But Pi's vision extends far beyond price charts. The true value lies in the ecosystem being constructed around the coin. One of the most significant initiatives is the introduction of KYC as a service. By leveraging its large verified user base, Pi is positioning itself as an identity verification provider for other digital platforms. In an era where online trust is critical, identity solutions are becoming essential infrastructure. With more than 16 million users already verified, Pi holds a powerful advantage. Few blockchain projects can claim such a large pre-validated community. By offering identity services externally, the network opens new potential revenue channels while reinforcing its relevance in the broader digital economy. This move places Pi in competition with identity-focused blockchain initiatives and demonstrates a transition from being solely a currency project to becoming a foundational technology provider. The community is also closely watching potential exchange developments. Kraken, one of the leading cryptocurrency exchanges in the United States, has signaled intentions to list Pi coin in 2026. A listing on Kraken would significantly increase visibility, liquidity, and accessibility, particularly within the U.S. market. Greater liquidity typically reduces volatility and attracts institutional interest. Major exchange listings often create ripple effects, encouraging other platforms to follow. Even the indication of interest from an established exchange reflects recognition of Pi's technological and community growth. What truly differentiates Pi in the crowded cryptocurrency landscape is its philosophy. While many projects rely heavily on aggressive marketing campaigns and short-term excitement, Pi has emphasized patient development. The phased mainnet rollout, structured protocol upgrades, and methodical KYC expansion all point to a long-term mindset. This approach may appear slow to some observers, but sustainable infrastructure requires deliberate construction. Every milestone reached today is the result of years of groundwork. Millions of users continued mining despite uncertainty. Node operators invested time and computing power. Developers refined code behind the scenes. The recent upgrades and growing market confidence are not sudden miracles, they are the outcome of persistent effort. As members of this community, it's important to recognize that we are witnessing a transition. Pi is moving from a concept-driven experiment to a professional digital currency ecosystem with expanding utility. Version 19.9 represents structural reinforcement. Version 20 promises further advancement. KYC services broaden the ecosystem. Whale accumulation signals long-term confidence. Potential exchange listings increase exposure. The crypto world is often noisy, filled with dramatic promises and rapid collapses. Against that backdrop, Pi's steady, disciplined evolution feels different. True success in blockchain rarely comes from hype alone. It comes from security, scalability, community engagement, and consistent execution. March 3, 2026 will likely be remembered as one of those quiet but powerful milestones. Not because of flashy announcements, but because of what it represents: maturity. The foundation is strengthening. The roadmap is unfolding. The infrastructure is expanding. And with each upgrade, the vision of a globally accessible digital currency becomes more tangible. The journey is far from over, but the direction is clear. The network is evolving carefully, brick by brick, version by version. And for those who have believed in the project from the beginning, today feels less like a finish line and more like the start of an entirely new chapter.